Hey guys, so there's a ton of stuff happening with SoFi stock right now, okay? I'm buying a ton at these prices and I want to cover it all with no fluff, so let's just jump right into it. Okay, so firstly, I obviously have to talk about SoFi's reverse stock split, okay? And everyone's been freaking out about this in my comments, like the number one thing that people want me to address. So I'm going to. Obviously, they posted more information on their website, so I've gotten all of this and I've highlighted some of the key features that I want to read about. So let's just jump right into it. Okay, so firstly, there's going to be a SoFi 2022 annual meeting. This is going to be on July 12th, and this is actually talking about the proxy vote. And so we're going to actually see the results of the vote, whether we're keeping on, all the board members that we currently have, or what everyone's interested in is the reverse stock split. What's going to be the answer to this? But I just want to jump in, just read this whole thing. Obviously, you can see that I've highlighted the whole thing just because I want to read it all. So let's just start. A reverse stock split is a proportionate decrease in the number, but not the total value of shares of stock held by stockholders. Following a reverse stock split, stockholders maintain the same percentage of equity in the firm that they held before the split. For example, a 1-for-3 reverse stock split would result in stockholders owning 1 share for every 3 shares owned before the split. Immediately following the reverse stock split, the firm's stock price is, in this example, 3 times the pre-reverse stock split price. To make it easier, just in case you're sort of a visual learner, I guess, is that, this was the exact same example that they used on their website. So you can see them going from $10 up to $50 after a 5-to-1 stock split. And, the amount of shares outstanding decreased by 5, and the amount of shares that you hold decreased by 5, but the value that you have, and my camera's cutting it off a little bit, but, is the exact same. You still have $5,000 worth of value and you still own 0.05% of the total company in this example. If stockholders vote to approve the reverse stock split proposal, it does not necessarily mean that a reverse stock split will occur. Instead, it means that the board will have discretionary authority over the next year to effect a reverse stock split and reduce the number of SoFi shares outstanding by a ratio of not less than 1 to 2 shares and not more than 1 for 10 shares. The board would make this decision if it determines that SoFi's and its stockholders' best interest to do so. By the way, that barrier for whenever they would actually enact this in the first place would be if the stock goes below $5 per share, in which this stock becomes a penny stock, where certain clients in certain states would need to actually sign off an extra waiver saying, yes, I'm okay with this stock being a penny stock, and that to advisors is just another layer that they wouldn't have to want to go through, and they would just pitch them a different stock. And now you'll see what I'm talking about, because they're talking about why SoFi would even consider a reverse stock split, and there's 3 exact points that they show off. 1, to appeal to a broader range of investors to generate greater investor interest in SoFi. That was one of their reasons, okay? They say that this could make it more attractive to investors, including brokerage firms that are reluctant to recommend lower price securities to their clients, okay? Or institutional investors with internal practices or policies prohibiting them from holding lower price stocks in their portfolios, which reduces the number of potential purchasers of SoFi common stock. That is, 100% true, okay? There's going to be a lot more barriers whenever a stock is a penny stock. As weird as it is, and honestly, I think that all these sort of procedures should be deleted because they don't make any sense. The only real indicator that you should go off of is market cap, because that's really what tells the price of the stock. Obviously, the share price doesn't matter how big a company is, right? Apple at $150 versus Berkshire Hathaway at $300,000 a share, okay? But Apple is still a way bigger company just because the pie is cut into many, many slices. But anyway, I digress. Let's continue. Improve the perception of SoFi common stock as an investment security, okay? So you can see here, lower priced stocks have a perception in the investment community as being risky and speculative, which may negatively impact not only the price of SoFi's common stock, but also the market's liquidity. And I mean, yes, to a degree, this is true, but also retail trading for the people that actually care about this sort of thing, I don't actually think that makes up a big enough price to actually warrant them doing a reverse stock split. It would just be a waste of time. I think the first point really makes up for why they need to split this, although they're not going to just write an article saying, hey, we have 1 point and this is why we're doing it. But anyway, this last point I think is an absolute throwaway, but we'll read it anyway. And that's attract new talent and partnerships by approximately reflecting the financial health of the company. Doesn't make any sense. Every company, Is Berkshire Hathaway more, financially healthy than Apple? It doesn't make any sense. I don't care about that, and I don't think any real investor does either. But what I do think is important here, and I highlighted this lastly, is unanimously agreed to put forward a proposal that would give the board the flexibility to manage through current adverse market conditions. 100%. If we do drop below $5, that is an important step, and they unanimously agreed, which I do also think is an important step as well. The board of directors are not dumb people, okay? They know about all the different failures that have happened in terms of reverse stock splits, but those were dying companies. I spoke about this on my Twitter account already. All dying companies have done reverse stock splits because it's their last hope on trying to stay alive. But not every reverse stock split was from a dying company. These are very different things, okay? Some companies do reverse stock splits and it happens purely just fine. Huge companies, Citigroup, for example, a company that Warren Buffett has invested in himself. Just recently, I think he invested in last month, okay? They did a reverse stock split. They're completely fine. But I mean, if you still can't get over the idea because you think that a bunch of dying companies haven't made their way through a reverse stock split before, because obviously that's their last hope, right? It's their last trying to get, oh, okay, well, maybe we can still stay alive if we just stay a little bit longer because it's a free option. It's not the same as a company with a bank charter that has, the closest relationship that a company can have with the Federal Reserve to get, unlimited amounts of money if they want at the cheapest rates possible. It's just trying to compare apples to apples to it is just ridiculous. But if you're going to be consistent and, you want to sell your shares, that's fine. I know someone who will buy them from you. That's Anthony Noda, okay? He has been buying like crazy. It seems like every time I want to make a SoFi video, he buys another amount of SoFi shares, this time another 150,000 at $6.90, bringing his total just on this chart. If we were to add up how much he's added, okay, that's $1.1 million. This is an extra 9.5% that he's added to his total. This is not stock-based compensation. This is his own money that he's pouring into the company that supposedly, according to my comment section, is going to go to zero once we do a reverse stock split, which isn't even a matter of fact, okay? It's just giving them the flexibility to do it if they need it, okay? And by the way, ever since they did that reverse stock split, the stock has only gone up because institutions don't care. Next, I want to talk to you guys about something a little bit different, the S&P 500 effect, okay? This is whenever a stock gets added onto the S&P 500, it's the idea that the stock price jumps up in anticipation of it being included because of the amount of passive investments like ETFs that will have to buy your stock because it's included because it has to track the S&P 500, okay? The buying activities on these ETFs are so common. It's where a lot of people actually put the large majority of their wealth. So whenever your stock gets added to this, it leads to so much higher liquidity for your stock. You see this in Tesla, okay? And whenever they actually, announced this in November of 2020, the stock skyrocketed because there were so many passive investors that may not have wanted to buy this stock at the high valuation of the company, but had to because they were invested in something like the SPY. Now this brings me to the Russell 3000, a sort of less popular little brother to the S&P 500 that tracks the top 3,000 stocks on the US stock market. Now the Russell 3000 is definitely not as prestigious as the S&P 500, and the amount of assets under management in ETFs that track the index is definitely nowhere near the same as the S&P 500. In fact, the S&P 500 is like the VIP room at a party, okay? You want to get invited there, that's where the big players sort of lie. But the Russell 3000 actually tracks around 98% of the overall stock market, meaning if you're not in the Russell 3000, you're not even in the party yet. So obviously, I'm bringing this up because SoFi got added to the Russell 3000. Now, we're not in the S&P 500 and we won't be for many years, but it's still very exciting to know that we're also a part of new passive investments where certain ETFs will have to track us. But how much assets under management are even tracking the Russell 3000? Now, the FTSE Russell Group does not actually have an ETF that is purchasable that tracks the Russell 3000. However, there are ETFs that you can purchase that track it for you. And out of the 6 largest ETFs, this is around $1.3 trillion worth of assets under management. But the real one that everyone pays attention to is the Vanguard Total Stock Market Index, or the VT-SAX. This makes up for about $1.2 trillion out of all that assets under management. Now, this is great news, okay? And I'll tell you why. But do not get overly hyped up on this sort of idea that this is going to move the stock by something like 20% or something along these lines. We'll be lucky if it moves the stock by even 2%. If we were even to take the $1.3 trillion and divide it evenly across 3,000 stocks in the Russell 3000, that would give us only around $400 million worth of extra liquidity. But it's not evenly weighted. It's weighted based on, how much we make out of the total Russell 3000, our percentage. And that's where we significantly lose. We're one of the smallest players, and there are some of the players that make up like 20% of the overall Russell 3000 is just in names like Apple, Meta, Google, Amazon, and Microsoft alone. So we'll be lucky to see an additional $30 to $40 million in our market cap just based on, joining something like the VT Sachs. But this is still, great news considering that this brings us more coverage. We'll be placed on more screeners in front of more analyst eyes, and this could get us some more airtime if new analysts actually start to cover our stock because they can find us in more places. Now, I've almost covered everything that I wanted to cover in this video, aside from the fact that Nancy Pelosi is starting to buy more stocks again. Now, if you don't know Nancy Pelosi, the congresswoman, the current Speaker of the House, she is an amazing investor, better than any sort of stock market or ETF or any hedge fund could ever do. There are even Twitter accounts that specifically track her insider trading. I mean trading. Anyway, Nancy has seemed to think that this is the bottom of the stock market as she continues to pour more money back in and actually starts to take some aggressive bets on names like Apple and Microsoft. It's good news in my opinion, that me and Nancy Pelosi, the best investor of all time, are, continuing to buy the stock market right now. And she does think that potentially it's bottomed out. And so she's starting to put more money back in. Obviously with the knowledge that she has, she can't be wrong. So good knowing that we're on the same side. But you know what? I might even just celebrate and double down on my SoFi investment this week because Nancy Pelosi is starting to get back into tech stocks. So we know it's nothing but up from here. But anyways, guys, in other news, if you want to see how much money I've made on YouTube in the past year, make sure you guys check out that video right there. Make sure you guys like this video and subscribe down below if you want to see more financial content just like this.